I am live right now. And you can call into the studios if you like at 323-815-4204. 323-815-4204, and ask me your questions, comments, or concerns. We'll answer them at the end of the show. Okay, again, you're live with Shirley. Mortgage Money with Shirley is the podcast, and we are on episode 13. Wow. Can you believe we are 13 episodes in, and we're going to talk about purchases and refinance. Okay? Just going to give you, like I said, some snapshots, some tidbits on each scenario, okay? So you're wanting to buy a house, right? You're a first-time homeowner and you're wanting to get out there and start your purchase journey, your investment portfolio building up. You want to get out there and just get in the game, right? So what do? First thing you're going to do, you're going to call your mortgage lender. That's me. You're going to call your mortgage broker and you're going to say, "Hey, I'm ready to go. What do I do? How do I, move forward? How do I proceed?" So the first thing is, of course, I've talked about this several times before, you're going to have us pull your credit. Yes, we're going to pull what's called a tri-merge. That's 3 bureaus: Experian, Equifax, and TransUnion. We're going to pull all 3 of those bureaus and going to get 3 FICO scores, that Fair Isaac Corporation something, something. So we're going to pull those 3 scores and we're going to take the middle of the 3 scores. We're not going to give you the high score. We're not going to give you the low FICO score. We're going to give you right in the middle. So if you've got an 800 as a high score, a 600 as the low score, and a 700 as that mid score, we're going to take that middle score, that 700 score. And if there's 2 applicants, you got a husband and wife, or a sister and a brother, 2 friends, whomever, you go into buying a purchase, you buy a house, we're going to take the middle of the 2 scores, but it's going to be the lower of that middle score, okay? The lower of the middle score. So again, you both have 800s, you both have 600s, and that middle score for one of the applicants is a 700, and the middle score for the other applicant is a 650. We're going to take the 650, okay? So it's the lower of the 2 middle scores if you're on a joint application, okay? That's the first step. And right now, like I said, interest rates are still really, really good, guys. They're under 3% in most cases. And if you're a first-time home buyer, there's other programs that we can talk about that would allow you to put down just a little less, or maybe have a little bit more flexibility for you as a first-time home buyer. So you'll want to definitely reach out to your mortgage broker and talk to them about that. But the very first step, get the credit report ran. Let's go ahead and pull that. Then you'll submit all your income and financial documents and your assets, and we'll compile it together and send it to the underwriter. We are not the underwriter. We're not. I promise. I'm not an underwriter. I'm a mortgage broker. I'm the one that qualifies you, and we put the application together and we package it really nice and neat with letters, information about what it is you're trying to do, and we plead our case to the underwriter, okay? I'm not the underwriter. I don't turn down anything but shirt collars. So I'm not the underwriter, and I know sometimes clients get a little testy, like, "Why won't you get my loan approved? What are you not doing?" It's not us. We're not the underwriters. What we do, though, is we try to plead the case on your behalf, and we try to get the loans. We want to close the loans just as bad as you do, believe it or not. I know some clients think, "You don't want to close we want to close your loan." Trust me, we do. So we get all that stuff submitted to the underwriter, and then we wait for your approval, okay? So it doesn't take long. I think that's one of the myths back in the day, that, "Oh my gosh, it's going to take so long. I don't know what to do. I don't know where to start." We'll get started with a phone call. But I promise you right now, we're closing purchase loans. We're closing refinances in 18 to 20 days. It doesn't take long. Long gone are the 45-day and the 60-day close of escrows. You've heard that before, like, "Oh my gosh, we signed a purchase agreement for a 45-day escrow. Why? Why would you do that?" In 2021, we are closing loans like that. And if you have a lender or a loan officer that's not closing your loan quickly, call me. But no, it doesn't take long, guys. It really doesn't. So once you get everything sent to the underwriter, your next step is, of course, you want to make sure that the loan is approved, and you talk to your real estate agent. Give them the approval. Let them know, "Hey, I'm approved. Let's sign this purchase contract, get it accepted, and go open escrow." Okay, go open up escrow with your earnest money deposit check. You're going to definitely want to talk to your real estate agent and make sure that you have this good faith check. It's an earnest money deposit. So depending on the size of the property, whatever the sales price is, you all negotiate with your real estate agent and the seller what that earnest money deposit needs to look like. Couple thousand, a percent of the sales price, whatever it is, you're going to take that straight to escrow and you're going to do what they call open up escrow. Okay. That means that you put a hold on this property that you plan to buy because the seller has agreed to sell it to you. Okay. And you've got an approval letter that says the underwriter, the lender has agreed to give you a loan for this house, right? So it doesn't take much, guys. I know I'm making it sound a little easy and I'm moving kind of fast, but seriously, it doesn't take much to buy the property once you're a qualified candidate. Just got to pick up the phone. Pick up the phone. Right? You got to start somewhere. And all the jitters and I tell you, this is 2021. We've closed an abundance of purchase loans. I mean, oodles of purchase loans. I mean, more purchase loans probably than the year 2018 when there wasn't even, the COVID-19 hadn't even happened, right? 2021 has been a very lucrative purchase buying season. Seriously. I was looking at a few stats the other day, reading a couple of news articles, and it was talking just about just this, how purchases have soared high. Lots of closings in the year 2021 versus 2018 when there wasn't even a pandemic. So what does that mean? It means it's your turn to buy. Buy your house. Go ahead and get it. But you got to start somewhere. Pick the phone up is a good start, is what I would say. Pick the phone up, right? So I'm going to jump over to refinances just a tad bit. Leave the purchases here. I'm going to jump over to the refinances. So you've bought a home, right? And maybe you put down a bunch of money. I don't know. Maybe you did. All right. And now here it is. You've made 6 payments. Okay. You've made 6 payments from the time you close your loan. Now, let me make sure you're understanding what I'm saying, because I'm going to talk about this as kind of another tidbit that you'll want to tuck it in your arsenal, right? If you close your purchase loan in the month of October, you're going to skip that November payment. Yeah, you are. You're not going to have a payment right away. You're not. So you're going to close in October. You're going to skip November. Now, is that free money? And, I didn't need to make a payment. Actually, what all that's going to happen is when it's time to pay off your loan or refinance, you're going to see that November payment that you skipped. It'll be on the back end. Don't worry, but it's not going to ruin your credit. Doesn't do anything to your credit. Doesn't do anything to your finances. It's perfectly fine because that's what we do. Been doing it for years and years and years. In the mortgage lending arena, you will, whether you're purchasing or refinancing your home, your mortgage loan, you will skip that next monthly payment after you close, okay? Some cases we even let you skip up to 2 months. We'll talk about that later. But you close your loan in October, you will skip that November payment, and the first payment is not due until December 1. Now, why am I talking about that? Because we're on this side of talking about refinances, okay? And you just bought your home in October, but you put a bunch of money down and you want to take some of that money back and put it in your pocket or put it in the bank. You want some of your money back, right? That you put down in October. So in 6 payments time, you can refinance and pull out the cash, right? If the property has appreciated and you have what we call a low loan to value, or you've got the qualifications for that loan to value to do a cash out transaction, you can seriously close your loan, purchase your house in October, you skip November, you start with the month of December as your first payment. You can wait 6 payments from December and do a cash out refinance and get some of this money back. You sure can. So what does that mean? Again, 6 payments. You don't have a November payment, so you start with December, January, February, March, April, May. May is when you'll want to do your application and try to get your loan closed for a cash out refinance, because you will have made 6 payments. As long as you made that May 1 payment, you can close your loan after. right? So you might want to close the loan, and you probably get started with the application and the paperwork May 1 or whatever after you've made, what'd you say, Shirley? After you've made that May payment, then you want to get started with your application and do all the stuff that you need to do to get prepared. And then you can close that loan in June, actually, or at the end of May. But it just needs to be after the 6 payments. After the 6 payments that we just talked about. You close your loan in October, you skip November, first payment starts December, January, February, March, April, May is that 6 payment. You're free to do a cash out refinance. Imagine that, right? And maybe doing a cash out refinance is not your thing. Maybe you don't want to do that. No problem, no worries. But let's just say perhaps in October, when you did your purchase money loan, you were a joint applicant borrower, right? Let's just say maybe mom or dad went on the loan with you to get more money or help you qualify, whatever the case may be. Let's just say that they went on the loan with you and you want to refinance and pull the parent off, pull the sister off, pull the coworker off, whoever is on your joint application in October. Maybe when May rolls around, you want to get rid of that person. Maybe they don't want to be on the loan anymore. Whatever the case is, maybe you broke up with the boyfriend or the girlfriend. Whatever the case may be, and you want to refinance that person off of there, do it in 6 payments after that 6 payment is made. There's all kinds of reasons why people refinance. And I'm not saying cash out is the only reason, but you can do it is the key. You can do it. So don't get too bogged down about this purchase money business, buying a house. Just get out there and buy it. You can afford it. You've got the assets. You've got the stability in the job time. Go buy a house, right? And then you can try to refinance later if that's what you need to do. There's always lending guidelines that are always changing. Just like interest rates. Interest rates are what we call cyclical. They roll around on a cycle. They go up, they go down, they go up, they go down. And most of the time, they land where they should. But right now, the interest rates are really, really good. And I get that question from time to time. Hey, Shirley, what are the interest rates? Well, it's a little bit more involved than what are the interest rates, right? You have to talk about your credit score. I don't know. If your credit score is this, then your rate is going to be this. If your credit score is this, then your rate is going to be this. You know what I mean? So it depends on what parameters, what your credit profile looks like, and your income and your assets and your loan to value and the value of the property. All that stuff comprises into what your interest rate would look like. So calling me, hey, Shirley, what are the interest rates? I don't know, 2.5, 2.25. I mean, what is your credit score? We've got to talk a little bit more in detail before we just start spewing out rates, right? So back to this refinance business. Okay, so you bought your house in October, you refinance in 6 payments. Well, Shirley, will I have to do an appraisal? It depends, because guess what, guys? Right now, and it's been this way for quite some time, but I'm just going to say right now, most of these loans that we're doing, even refinances, I won't say purchases too much, because purchases, you definitely want to do an appraisal, right? You don't want someone saying, oh, buy my house for $600,000, but it's really worth $500,000, right? So you're going to always want to do an appraisal for the purchase, okay? But for the refinance part of this, right now, and like I said, it's been going on for quite some time, so this is nothing new under the sun, but right now, most of the appraisal waivers are happening. Most of these refinance loans, we're getting an appraisal waiver. We are. And the thing about those appraisal waivers, why do you care that you're getting an appraisal waiver? Well, one, appraisals aren't cheap. They're between $500 to $600. And depending on if you've got a condo or a multi-unit, those figures can be pretty high. So when a client says, I don't have to do an appraisal, I just saved you $500 or $600. Yeah. So call your mortgage broker. Call me and let's talk and see, because I know a lot of the times when people are thinking about refinance, oh, I don't want to go through the paperwork. Guess what? We've got lenders now that the paperwork is pretty much non-existent, because we're going to e-sign most of all of these documents. Okay. We're going to do electronic signatures. Your application, electronic signature. Disclosures, electronic signature. All of this stuff is sent right through your email, and all you have to do is log on, right? Well, I don't want to submit a pay stub. Okay, pay stub smashed up. Don't worry about it. Give me your HR department's phone number and we'll call them and we'll do what's called a written verification of employment. So Shirley, I don't have to give you that pay stub. Do you have an HR department? Do you have a supervisor that can verify your job title, your wages, your position, where you've been, how long you've been, what you do? Do you have someone that all I have to do is pick up a phone call? And it definitely won't be me doing the phone calling, but all the processor has to do is pick up the phone and say, hey, I need a written verification of employment. You don't have to submit a pay stub. Imagine that. Maybe you don't get pay stubs. I don't know why you don't, but maybe you don't get a paper pay stub and maybe your internet is down or something and you can't send your pay stub electronically. Give me the name and number of your HR department. Pay stub, space stub. We don't even need the pay stub anymore, but we do need a way to verify the employment, okay? So a lot of the times, like I said, I think refinancing has a stigma about it, about, oh, all this paperwork, I'll have to do an appraisal. Guess what? Most appraisals don't even have to do them anymore, okay? And you ask, well, why don't you have to do an appraisal? Well, with that specific lender, what they'll do is they'll pull a desktop appraisal, and it's a fancy word for just going into the system, going into the computer and pulling from their software the comps that are in that area. And they'll give them a particular number. And if that's the number that is good for you, then they'll bypass the appraisal. Yeah, they really will. It's a great tool. So in the pay stub, same thing. They'll get a hold of that written verification of employment, or they'll go through the work number, and the work number is just another little tool that they'll use. With most companies have signed up to the work number, and it's a huge data bank, and all they have to do is click, 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 and they've got your employment information. So I don't want to handle the paperwork. I don't want to supply any pay stubs. Guess what? We probably don't even need your pay stub. Well, I don't want to supply any bank statements. Guess what? We probably don't even need any bank statements. There's so many things that have changed throughout the course of, since I've started as a mortgage lender. I started about 28 years ago, and almost 30 years ago, everything was done by paper and snail mail, paper and snail mail. Then we started using the faxes, and that became even slower and a bigger disaster. But nonetheless, now it's so seamless, so paperless, right? So don't worry about, oh my gosh, it's the paperwork. I don't want to get bogged down with that. Well, let me do the bogging, right? I will handle that for you. Now, let's switch gears and let's go back a tad bit to purchases, because this is very important. So, recently, I've got a bit of good news. Someone very close and dear to me, that's 78 years old, closed on their first, or not first, did I say first? I'm sorry. Closed on their number 6th or 7th house. But nonetheless, I am so excited and ecstatic for this person who just bought themselves a house. Another joy, another chapter in that person's life, and they did it successfully without a hitch, holler, hootenit, nothing. It just went through because that's what we do, right? Successfully. It was just a beautiful thing. Beautiful, beautiful process. But I mentioned this person because they have an HOA, right? Now, over here on the purchase side, and on the refinance side too, but when you're trying to buy a house, do understand that HOA, that housing organization association, right? HOA, that is the community, the property management, that is the association that pretty much looks after the property grounds, right? It does the amenities, meaning it may do some landscaping, keeping the grass cut for you. It might have a security gate. I live in a gated community, and that's part of the HOA I pay for, right? So some people have HOAs. Not a bad thing, not a problem with that at all, but do understand that the HOA is a monthly payment that you will pay every single month. It's not included in your mortgage, okay? Your mortgage is separate, right? Separate. The lender does the mortgage, the HOA does the HOA stuff, right? And so every month they'll bill you. Now, here in California, the HOAs are anywhere between $250 and $300. How do I know? Because I pay them. So, what I'm saying is this. When you're trying to buy a property, right, keep in mind, the lender has to qualify you, right, with that HOA in mind. That's going to be part of your debt load. So I get asked this question from time to time as well. Well, Shirley, I want to buy a condo, right? I'm a first time home buyer and I want to buy a condo, but I want a condo that's at least $600,000. Okay, let me explain. If I qualified you on a condo and you said you wanted this $600,000 condo, I'm going to say, okay, you really can't afford with your qualifications, okay, a $600,000 condo. Well, why not, Trey? My income is this. Blah, blah, blah. I understand your income says that you qualify for a $600,000 single family resident, not a condo. And here's why. The condo, now we have to stick in a $300 HOA payment, right? We've got to stick in a $300 payment. So your $600,000 buying power, if it were just a single family resident without the HOA, it could stay at the $600,000. But because now we have to include the $300 HOA fee for living in this condo, your $600,000 approval has now dropped down to about 560, 565. Yeah. And maybe depending on the interest rate, it might even be, a $600,000 approval down to a $550,000 approval, So it just kind of depends. That's why I talk to my first-time home buyers. Be careful what you're asking for. If you want this $600,000 approval, go buy a house, a single-family house, a single-family resident versus the condo, because now your buying power has diminished, okay? So keep that in mind. The HOA is not a part of the mortgage, but it is a part of the housing expense, right? You've got mortgage and you've got an overall housing expense. And that housing expense is what the lender determines what you qualify for. And if you got a pesky little HOA, and I hate to say that because those HOA fees drive me nuts, but nonetheless, they're there and they take care of the property grounds and the neighborhood and the community, right? So you do need to pay those. And that's why, back to my 78-year-old client, well, they weren't my client, but 78-year-old buyer, and bless their heart, they have an HOA. But again, they knew within the realm of what they qualified for, so it really wasn't a major to-do. But that condo business can be a major to-do for some buyers. And I'll tell you something else. I mentioned condos have these HOAs, but some townhomes or PUDs, planned unit developments, some PUDs, some townhomes, and even some single-family residences will have HOAs. Yeah, believe it or not, because some neighborhoods, even though they're not gated or anything like that, but some neighborhoods have a neighborhood clique or a community that they, feed off of, and, they do little community things or whatever have you. They might pave the sidewalks or whatever. And their HOAs aren't really as expensive as a condo or a townhome, but they're there. Be mindful. They're there. And it's your job to ask your real estate agent, hey, are there any HOA dues out here on this property? It is your business to make sure you ask, okay? And here in California, there are some communities that actually have Mello-Roos. Yeah, I had to learn that lesson the first time I bought my first home here in California at the age of 29. I bought my first property here, and I tell you, I had no idea about these Mello-Roos fees and an HOA. Yeah, I had both. Didn't even know about it. Had an HOA and a Mello-Roos. Yeah, didn't know. So I went through, I bought that house, I was 29, 2004. And true story. I knew about the HOA, $360, because the community I was living in was very pricey at the time. And the HOA by itself was $360. Yeah, I knew about the $360, no problem. I paid that, not a problem. But it was the Mello-Roos that I didn't know about. And so I kept getting these invoices. And like I said, true story, kept getting these invoices, and I'm 29. What is this? Ball it up, throw it in the garbage, because all I kept thinking is, hey, I only knew about the HOA. I did not know about the Mello-Roos. Well, when I sold this property years later, did I have a big, fat, long invoice that said, Mello-Roos, you will pay, balance due. Oh, it was about $4,000. Yeah, absolutely. Because I had went years without paying it.
Right. I had went years, had no idea that this little pesky little thing was even a such. I thought someone was scamming me. I was 29. I thought someone was scamming me. It's my first house in California. I thought someone was scamming me. So yeah. So just understand, HOAs and Melrose fees are very real, and you will need to pay them. So make sure that you're talking to your real estate agent, because those are part of the housing expenses that you will need to make sure your lender knows about to qualify you. Because what you don't want, and I've had this happen. I've had this happen before with a client. For whatever reason, they were buying a PUD, right? And most people are thinking PUDs, planned unit developments. These PUDs, like I said, most of them are not behind a gate or anything, and they don't really look like, the condos, right? But I had a client, like I said, and this has happened more than once, but unfortunately, in this person's case, didn't know about the HOA. Real estate agent never said anything. We got all the way up to the appraisal. Now, the appraisers know every single time if there's an HOA. So the appraisers will be the ones, if your real estate agent doesn't tell you, that appraiser will sure make reference on that appraisal report, HOA community fee of blah, 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 blah. Now, and this is something that is so unfortunate, and you definitely don't want this to happen to you. But what had happened was they signed their purchase contract, got their offer accepted, was knee deep into their escrow, 15 days into before we were going to close, and the appraisal report comes back, and the lender goes, uh-oh, there's an HOA fee on here that you're going to have to pay every month. It's about $250. And the buyer goes, $250? Real estate agent, why didn't you tell me about this $250 a month? And the real estate agent, oh, I'm sorry. It won't happen again. Well, of course it's not going to happen again. But the real estate agent is, apologetic, all this. And the buyer calms down. Okay, well, I'll just have to bite the bullet and pay the $250 a month. I'll just go ahead and have to eat that for now. And okay. Well, it's okay for the buyer and the real estate agent, but the lender, remember, there's a whole housing expense that you have to qualify for. So in this particular case, the lender does all their calculations, reworks the file with that $250 newfound HOA fee, and calls me back, Shirley, your client doesn't qualify for this. Yeah. Hang up. So I had to be the bearer of the bad news to let this buyer know, so about this house that you want, you're not going to qualify. Not with this house, with this condo, or this HOA fee. So what essentially had to happen is then that person had to get a co-borrower, because they really, really, truly wanted this house. And they ended up getting a co-borrower. In this case, they ended up getting a co-borrower who had more income, credit, and all that kind of stuff. And they ended up closing the loan. Now, sometimes that's a workaround, right? Sometimes that's a workaround. But then there are some cases that they're just not that lucky or fortunate to have a co-borrower, or they can put down more money, because that too is another workaround. Put down more money, or try to buy down your interest rate to lower the rate low enough to get a smaller payment. Those things also can happen to help you compensate for this newfound HOA fee. But just be mindful, because what you don't want to have happen is you get down to the burnt of everything, and you're thinking you're getting ready to close, and there's this HOA fee. Yikes, right? So that's one thing that can happen about these HOAs and buying a house. And that's why I try to make sure I'm educating my first-time home buyers. Be clear and mindful of what you're trying to buy. Are you trying to buy a condo with an HOA? Are you trying to buy a single-family resident without the HOA? Your buying power is going to be more with the single-family resident, because you're not going to have an HOA. In most cases, you will not have the HOA, okay? So those are just things that can happen with a purchase or a refinance centered around that HOA. It's just, yeah. But I brought that up just because, like I said, I was so very happy and excited for this young lady, this young 78-year-old who bought another house. It was so beautiful. So she had an HOA, so I just thought I'd bring up that. But not that scenario happened to her. She knew well in advance about her HOA, and it wasn't that pricey. But nonetheless, those HOAs can be mind-boggling. Guess what? Our 30 minutes finances up. So I hope you guys have enjoyed yourself with mortgage money with Shirley this afternoon. Again, I'm your host, Shirley Nichols, on my personal page, Facebook, and then on my business Facebook page, Clear Sky Mortgage and Realty. And also my YouTube channel is up, Mortgage Money with Shirley. And it's episode 13, but also on the YouTube channel, Mortgage Money with Shirley, you'll see all the previous episodes as well. But this was episode 13 on today, Wednesday, October the 27th, live and direct here in Los Angeles. And I promised I would give out my cell phone number at the end of the show. So here it is. Write it down. Call me up, 818-720-7575. Feel free to call me, DM, comment, questions, concerns, and I'll promise to get back to you. Other than that, have a beautiful, blessed Wednesday and the rest of your week, and I'll see you next month. Thank you.